Hello and welcome to BharatBulls. So in this video, I want to give you 3 actionable trades that you can take starting tomorrow in order to beat the index returns in the next couple of months. And before I give you those trades, I wanted to quickly discuss a couple of things from the US markets perspective and from the Indian perspective as well. So do make sure you watch to the end of the video to understand why I'm saying a couple of things and why I am suggesting you stay away from trading the index for the next couple of months and be only in equities. So I want to begin with a tweet that I made last week on Wednesday. So if you remember what I had said in this tweet, it was that since 2022, every uplag that we have seen in the US markets has resulted in somewhat 8 to 10% fall in the last 2 years. And given the same setup that has played out this time, I was expecting a similar fall this time around. I was not expecting it, but given the historical conditions that have prevailed, that is what I had expected initially, but I have changed my stance now. And the reason for that I will tell you is because of the news flow that has been taking place in the last couple of weeks, especially. So I had made this post where I was cautioning people to not go long in the market given how stretched the US markets were looking. And so if I go back to the charts of S&P 500, that's exactly what played out. However, it played out after a couple of days. There was just some lag. So this is where I remember I made the post. The markets went up another 1.5% before eventually falling down yesterday. And the market's closing yesterday was not very strong as well. It closed absolute at the bottom of the candle. And I expected initially a fall of about 5% at the minimum, but that may not be the case. So you got to understand why is it that I am changing my stance now. See, the news flow that was in this particular phase of the markets during late 2022 and early 2023 is that the Fed was not sounding very bullish. It was constantly talking in bearish sentiment, always looking forward to rate hikes in the interests, and they were not giving any positive signals to the market participants, which is why a lot of institutions resisted putting in money. And these short phases of euphoria lasted only for about a month and a half. Now, you got to understand that the markets are forward looking. Ever since the news has come out that the Fed may look to cut the rates by 75 basis points in the next financial year, the markets have just rallied. And if you notice, this rally has been about 16%, if I'm not wrong. Let me just quickly check. Yeah, 16% from the bottom of November. Now, since the markets are forward looking, they are anticipating more rate cuts in the next few years. And this cycle of money being pulled out of the system is not going to last very long, and there is a euphoria amongst investors. So everyone is chasing these markets blindly, which is why I do not anticipate a pullback as deep as it has taken place till now. What I think as of this moment is that this pullback will be only limited to somewhere about 5 odd percent. So we've pulled back already 1.5%. At the most, this can stretch to this particular pivots or this particular congestion range over here, or this particular gap that is there in the markets. So these both can act as potential supports in the market, and the market can just fluctuate over here for the next year, couple of months or so. And you've got to understand the macroeconomic perspective from the global leadership point of view as well. There are over 8 major economies in the world that have elections in the next year. The US, UK, India, Taiwan included. So these are major economies that contribute a lot to how the money flows inside the whole world. And a lot of investors will be cautious around the global turmoil and the global events that have been taking place. So that is one thing to be cautious about. The other thing that I want to point about is the oil. The oil markets have started rallying, and although they have seen some bearish action in the last 2 days, but we have again taken support from these particular pivot points and started rallying up. So this is never a good sign for the equity markets. But in the short term, this does not have to bother any investor as such, as long as this sticks in a range and people are expecting the prices to fluctuate within this range. Companies can plan these things very well in advance. Now, coming to the Indian markets. The Indian markets, in contrast to the US markets, have not rallied as much. So if you remember, the US markets have rallied 16 odd percent. The Indian markets in contrast have risen only 14%, which means that we are somewhat either just there in terms of beating the US markets or lagging the US markets in some sense. So, and given that Indian economy is much stronger than the US economy, I don't expect the pullback in our markets to be that steep either. Given the same ranges that played out in the markets, this could be one potential range where markets can just fluctuate between these two particular pivot points now. And additionally, the market can also take support at this particular gap region. So in the next few months, I don't expect any sort of bull run that massive. Yes, there might be a case where investors come back in after their holidays, the institutionals come back, and we might have one more up leg before we kick into the new financial year. But till then, we don't anticipate trades in the index to last a very long time, such as this phase that has already taken place. Now, coming to trades that you can take starting tomorrow. Now, the reason I say this is in the next 3 months, there's hardly going to be any action or any momentum in the indexes. So if you're into futures and options, you're just going to be stopped out of your positions, because one day it's just going to be up to 2%, next day it could be down 1.5%. You'll just keep frustrating yourself and just giving money to the government and to your brokers, which is why I think the market for the participants right now, the retail participants that is to look into specific stocks, specific sectors of the market that are still holding up very well despite the volatility that has played out in the last couple of days. So the first stock I want to talk about is Voltas. So the reason I start with this particular stock is look at the volumes that have come in the last 2 or 3 days. When the market was falling down, look at what Voltas was doing. It was just moving up in one direction. Eventually it closed a little bit lower than that, but that's just owing to the volatility. Had that not played out, we could have closed very well on the upper end of the channel. Now I have given all these trades that I'm talking about already in my Twitter handle, BharatBulls underscore. So if you haven't followed me yet, please do give me a follow. But a lot of things have changed since yesterday, so I thought it would be a good option to revisit the trades that I have given out. And of course, please take care of your own money. This is not a recommendation. I'm just discussing the markets from what I see with my limited experience of about 8 years. And I can very well be proved wrong. This is the stock market. Anyone can be proved wrong at any point of time. So yeah, coming back to the structure of Voltas, I see a lot of contractions on this particular chart on the daily time frame. I see a lot of volume buildup that has taken place in the last couple of days, beautiful rise in volumes, and this is where I had alerted to go long in this particular counter if the price takes out this particular level with volumes, which it did again today. Look at the volumes that have come in today despite yesterday's nasty session. And yeah, so this is where I had given an entry. So this is where you could have scaled in 50% of your positions, and the remaining 50% positions I have said to take above once this particular pivot is crossed. Now the stop loss for this particular counter remains at 750, but if you want to be a little more aggressive in cutting your losses, you can cut 50% positions on the breach of this particular level at 810, and the remaining 50% positions over here. The reason I keep my stop losses so wide is because you need to understand that stock markets do not function in one direction. They do not keep going up and up. You need to give your positions time to work out in your favor. You need to give your positions some bit of uh, region where they can fluctuate and then eventually move up again. It's not going to take place within one day that this particular pivot is crossed and next week this particular pivot is crossed. That is not going to be the case, because look at the volume activity that has taken place. Do you think the participants who have accumulated these shares over here are in any sort of profit right now? No. And look at what the market has done since June this year to almost the end of the year right now. every one of these investors are facing a loss in this counter. They are going to cut out of their positions as soon as price reaches anywhere in here, which is why there's going to be a lot of volatility, a lot of churn in this particular region before we eventually break above this particular pivot point. The next trade that I want to propose is GICRE, or general insurance. So this is again from the insurance sector. I recently did a very detailed thread on the insurance sector as well. So if you haven't checked that out, go to my Twitter handle, you can do it. The reason I again come back to this trade is because look at how beautifully this pivot position, or this particular pivot that I had mentioned, is being respected by the market. When the markets fell nastily yesterday, look at where the price started taking support, and even today it went below this particular low and took support somewhere around this particular region, which reestablishes that this is an important place in the market for the investors of this particular stock. This is where the buyers are defending the price. This is where you should cut out your positions if the price goes below it. So in terms of risk reward, your risk is only about 17 odd rupees, which is nothing compared to the potential gains you can make in this counter. Again, I had alerted about this stock when the price was about here. I said that if the price breaches this particular pivot, you can go long. If you want, you can take gradual exposure, start accumulating the stock every week or every day if you want, and start building your positions. And when the surprise move happens on the upside, you would already be sitting on a beautiful little 5 to 7% gain. And to be safe, I would say to wait till this particular pivot is taken out, see if there are volumes coming in. I already see a lot of volumes coming in, so that means a lot of investors are gradually accumulating the stock. But if you want to be a little more safe, you can a little more aggressive. You can start buying in some quantities over here, and then eventually scale up more when this finally pivot breaks out. And the last stock that I want to give out as a recommendation would be Varroc Engineering. Now, this is a new IPO kind of name. First of all, I'll quickly go through the short-term structure that I see in this particular counter. So yeah, so I saw a flag and pole breakout playing around this particular candle, but there was some supply towards the end of the day, and this closed towards the low of the day. But you got to understand the volumes that are coming in are not as much. Look at how the volumes have dried out since this particular candle has finished printing. Every time the price tried to move up, there was a spike in volumes. This is potentially a place where a breakout could have taken place, but the volumes were not that much, so the price has eventually retraced back. So if I just pull this flag over here, as soon as you see price taking out this particular pivot, you can look to go long. Further additions can be made in this counter once this particular pivot crosses out. If you want to be aggressive, you can cut out 50% of your positions here, and the remaining 50% positions you can cut it out over here. So that is how you got to structure your trade. You got to give it time, you got to give it space to fluctuate, to shake out all the players, and that is when you will realize a lot of gains in the market. Another reason why I wanted to share Varroc Engineering is that it is coming out of its first base. It's a recent IPO kind of a name. It only listed in 2019 if I'm not wrong. Yep. So look at the volumes that have played out since it has listed. Every one of these investors, look at the volumes. There is no volume as such. So those who have bought this IPO are stuck since they bought it. Most of those positions must have been offloaded by now. No one holds such a stock for 4 years when cycles like 2020, 2021 plays out. And the bulk of the volume, look, it has come at these levels. If you see, at 300 levels, and even in the recent phase of bull run, the most of the volumes were around 300. So the majority investors in this particular counter are not facing any losses. Hence, this trend tends to continue in stocks where people are not facing any losses. Why would you want to book out your profits when there's a potential to gain triple digit returns on your holdings? So smart investors play this game like that, and which is why retail investors often face losses in their own portfolios, because they just don't have the patience to stick to their own plan. So you got to understand the game, you got to play the game as per them, and get your own edge in equities and stay away from futures and options. There are a lot of other trades that are setting up as well that I don't discuss, but I'll quickly go through the chart. So Saxoft was another structure that I posted about. Look at where Saxoft is trying to take support on the daily time frame. Again, in this particular region, if you want to go along, start accumulating here. You can add gradually once these particular pivots gets taken out, and this is how you build gradual exposure over time. Once you have gained some bit of experience, you'll understand that accumulating over here, adding more when pivots are violated, is a sure short way of making big money in the markets. In the large cap space, look at Bajaj Finserv. Absolutely nothing it has done in the last couple of days, just respecting the previous demand region. So if you remember, these are the volatility contraction pattern that I had marked about. It has still respected it. No volumes that have come in the last 2 days, or in the last 5 days, especially since the pullback has started. This is where you should start looking to go long encounters like this. Dredge Corp, I remember, is also another stock that is also testing out demand. Look, absolutely no volume that have come out on the retracement. It was a stage upon stage breakout, and again today there was a test of demand and there was an up move. So you got to be nimble in cutting out your positions at losses. Follow the pivots, stick to the charts of daily time frame, weekly time frame. Get out of short term mentality. The next 3 months are going to be tough if you're in the FNO space. It's just going to get you frustrated. So take care, guys. Take care of your money and have a good day. Jai Hind.